Welcome, everyone, to The Economic Paradigm Shift, Stephen Miran's vision for global markets. In today's video, we're diving into how tariffs are being used as a tool to architect a new economic structure. Stick around until the end, because I'll be sharing how we can diversify and adapt to thrive in this evolving landscape. I'd like to share with you a compelling economic theory that's currently shaping global market narratives. Stephen Miran's vision for the United States' role in the world economy and its far-reaching consequences. The information provided in this video is for educational and informational purposes only and should not be considered financial or investment advice. Investing in the stock market involves risk, including the potential loss of principal. Always do your own research and consult with a financial advisor before making any investment decisions. So, who exactly is Stephen Miran? He's a policy architect, crafting innovative solutions to complex economic challenges. He's an economic strategist, adept at analyzing market trends and predicting future outcomes. And, most importantly, he's an advocate for rebalancing, pushing for a fairer and more sustainable global economic system. Miran's work is driven by a desire to create a level playing field, ensuring that all nations contribute their fair share to global prosperity. He's a thought leader whose ideas are shaping the future of international economics. For decades, the U.S. has provided significant global public goods. This slide highlights two key areas: the security umbrella and the dollar and treasury system. Under the security umbrella, we see the vast U.S. military presence, including overseas bases, NATO leadership, and defense commitments to allies. The dollar and treasury system provides the financial infrastructure for world trade, with the dollar as the reserve currency and U.S. treasuries as safe assets. While these benefits support the global economy, they impose substantial costs on U.S. citizens, a burden that Miran argues is unsustainable without greater contributions from other nations. This pyramid illustrates the core problems in the current system. At the top, we have the overvalued dollar, which weakens U.S. exports and jobs. In the middle, ally free riding allows allies to enjoy security without paying their fair share. At the base, trade imbalances lead to rising U.S. debt and the strengthening of other economies. The strong dollar undercuts U.S. competitiveness, while allies benefit from U.S. protection without adequate contribution. Trade partners channel surplus capital back into U.S. debt, perpetuating an uneven system that Miran seeks to address. Miran proposes a solution: the Mar-a-Lago Accord. This accord has three key components. First, defense burden sharing, where allies increase defense spending and rely less on U.S. protection. Second, currency realignment, where surplus countries allow their currencies to rise, aiding U.S. exports. Third, strategic tariff deployment, using tariffs as leverage to secure better economic terms. This pact, named after Trump's resort, aims to end one-sided U.S. sacrifices and ensure all nations contribute fairly, acting as a modern Plaza Accord. Why is this shift happening now? Several factors are converging. We have post-pandemic pressures, with new economic realities after COVID-19. Rising fiscal deficits are creating unsustainable government debt. Geopolitical tensions are escalating with challenges from China and Russia. And middle-class decline is increasing domestic economic pressures. These factors, combined with rising middle-class anxiety and geopolitical friction, have created the perfect storm for a fundamental change in America's economic posture. Let's examine the financial market implications. Bonds, TLT, are falling due to higher rates and reduced global demand. The dollar, UUP, is weakening due to policy changes and reduced reserve confidence. Equities, SPY, QQQ, are pressured by tighter liquidity, tariffs, and shrinking margins for tech giants. Miran's theory explains this rare, simultaneous decline as a sign of structural market realignment, not a typical cycle. Understanding this framework is crucial for investors navigating these policy-driven market changes. This ETF market snapshot for April 2025 shows the divergent impacts of Miran's policies. Gold, GLD, is up 26%, a safe haven in a shifting global economy. Gold miners, GDX, are up 18%, boosted by the gold price surge. Japan, EWJ, is down 3%, hit by a strong yen and defense questions. China, FXI, is up 7%. resilient amid tariffs and economic shifts. These results highlight how different markets are adapting to the new economic landscape. This slide outlines global economic realignment projections. We anticipate dollar devaluation to aid exports. Tariff expansion will be used as negotiation leverage. Alliance restructuring will lead to new partnerships under revised terms. And asset revaluation will cause major repricing across markets. Miran's approach aims to reshape global economic rules with a coordinated push for these changes, potentially leading to widespread asset repricing and far-reaching geopolitical consequences. This isn't just about economics. It's about reshaping the global order, with the United States demanding a more balanced playing field. Finally, let's consider strategic investment considerations. This pie chart shows key asset classes. Prioritize hard assets, gold, to hedge inflation. Add domestic value stocks, and increase export-oriented equities that benefit from a weaker dollar. Maintain cash liquidity and selective defense sector exposure as policies evolve. Investors should stay flexible and monitor developments closely to navigate these changing times successfully. I hope this analysis gives you a deeper understanding of what's unfolding and what to watch in the months ahead. See you in the next video. Thank you.